Hi, this is Andy Filipiak in Toronto for the week of February the 20th. Over the last 3 weeks, we've seen quite a sell-off in the U.S. bond market as well as the stock market. I've included a chart of the U.S. 10-year and the S&P 500 that highlights this move. In the month of January, there was much optimism that the Federal Reserve in the U.S. was likely close to being done on their interest rate hikes. Well, over the past several weeks, there's been several U.S. Federal Reserve governors that have come out and stated that they don't believe this is the case and that rates are going to go higher. And as a result, stocks have been selling off and bond yields have been going higher. Now, earlier this week, we saw a trial balloon issued stating that the Federal Reserve may raise their inflation target from 2 to 2.8 to 3%. Now, this action would make a lot of sense as the higher interest rates go to break inflation, the greater the risk to the economy. There's already signs that the U.S. economy is weakening. For example, last week we saw that existing home sales for the month of January dropped 37% year over year, which is a very dramatic move and shows that there's not a lot of liquidity right now in the housing market because of higher rates. And these higher rates also are working their way slowly into the U.S. economy. So the Fed has a tightrope to walk here in trying to break the back of inflation, but not hurt the economy too badly. Unfortunately, we also have the geopolitical risks that at the time of this video appear to be getting worse by the minute. Thanks for watching.